So we've just heard Nick and Diana's overall reflections on the key themes from 2021, and we're now going to spend a little time talking about what this has meant in the regions where we invest, how we've directed our tools and our thinking into overcoming some of the challenges faced, and of course, how we're taking advantage of some of the opportunities to achieve impact. So I'm delighted to be joined by three colleagues to talk about this. Srini Nagarajan, who's Managing Director and Head of Asia. Srini has long headed up our work in South Asia, and his role now encompasses our newly expanded climate remit in the Indo-Pacific. Stephen Priestley, who is Managing Director and Head of Financial Services, and interestingly for this discussion, is our Interim Head of Africa. And Yasemin Lamy, who is Managing Director and Head of Asset Allocation and Capital Solutions. Yasemin's been pivotal in overseeing our work on catalyst strategies, where we're looking to take higher risk to shape nascent markets, and has responsibility and oversight on how we allocate our capital and think of neat and different solutions for the challenges and opportunities faced in our markets. Srini, Stephen, Yasemin, thank you all for joining us today. Hi. I'd like to start off by actually asking all of you to share each of your reflections on 2021, what's been quite a busy and in some ways unpredictable year. Srini, can I start with you, please?
Sure. Thanks, Lynsay. It's a pleasure talking to you. And this is a very important event annually for us. The economic challenges posed by COVID and the Omicron variant, it created opportunities for us in the form of structural impediments to economic growth. The main one being adaptation to the digitization, which resulted in expansion of access to medicines, innovative tech solutions to address problems of warehousing, logistics, and open up access to for women for jobs, for housing, and of course, increase the pace of execution in renewable energy and climate resilience. 2021 for us was a busy year. We committed around $750 million in the region, with 64% in India and the balance in the rest of South Asia. And we kept to our core themes of climate, productivity, inclusion, and remain additive to our investments. Just want to take 2 minutes and talk a little bit on the inclusion side, which is very important from the point of view of post-pandemic recovery. We provided the much needed liquidity support to MFIs in India and Pakistan, and timely support to commercial bank in Sri Lanka, where the economy is still going through a turmoil. And on the, and also the access to medicines, high quality medicines in the form of supply chain initiative, which we did through Medica Bazaar. Sustainability side is very important from the point of view of our support to Atlas Solar in Pakistan and our investment in GGF, which is a large platform which is being built, and our first project finance deal to NL, really. And I just want to close by saying that the year ended with a turn in economic cycle and leads into and has of course led us into a very different economic challenge for all investors, include us. But CDC is a counter-cyclical investor and looks for opportunity when our capital can be more additive, really. Lastly, I think we decided our expansion into the Indo-Pacific market, which is very exciting for us as BII and for me personally, which will shape up in 2022 with a complete focus on climate. And we plan to deploy 500 million pounds over the next 5 years, mainly in Indonesia, Vietnam, and Philippines. And our team has expanded to 50 professionals. When I joined in 2012, I was a loner here with 75 odd people in London. And today I see the team. I'm very proud that we are just not expanded in investing professionals, but also professionals who look after our BI, DI, and ENS. I think we continue to forge our relationships with FCDO, other DFIs, and of course be a part of this larger UK international finance offer and are leveraging UK PLC to maximize our impact in markets.
Thank you, Srini. And Stephen, how about you?
Yeah, no, thank you, Lynsay. The African continent in 2021, much like the Asian region, faced serious challenges, obviously, and we saw the markets really reacting to the pandemic in different ways across the region. There was certainly a slowdown in growth, in GDP growth across all the different economies. We saw inflation pressures kicking in. We saw a reduction in consumer confidence as well, that also led to companies slowing down their CapEx, their growth investment and CapEx into their businesses. We saw banks sort of holding on to their liquidity and not really extending credit into the real economy. across the whole continent. So there was definitely a pullback by banks, by companies, by investors, because the ability to sort of see with any clear visibility how these events would unfold during the pandemic was very, very limited, and how markets would react and how governments would react varied across the continent. So as Srini said, you know, what we tried to do as BII in that context was think countercyclically, think about how we could deploy our capital into that kind of market environment of uncertainty and volatility, and think about how we can do it in a way that drives the three impact dimensions that we talk about, which is inclusion, productivity, and sustainability. And we did that in numerous ways, especially as we saw the markets beginning to recover in the second half of 2021, and growth slightly pick up. In fact, I think growth slowed down materially, but maybe not as much as some were predicting, like the IMF. And we saw signs of really encouraging opportunities to invest into. Now that clearly has changed in the last 6 months, and you know, we'll talk about that later. But there's definitely the African continent now is really confronted with the perfect storm of external shocks that have come in the form of a strong dollar, increased interest rates, increased food and commodity and oil prices, which is leading to a really powerful concoction of sort of external shocks that we now confront. But I do think, you know, we did see lots of opportunities to invest in 2021, and we'll go through several of those examples, no doubt, in the course of this conversation. Thanks.
Yeah, thank you, Stephen. And over to you, Yasemin.
Thank you, Lynsay. Building off what Srini and Stephen described as the experience of our partners and clients in market, I very much came into 2021 thinking about whether we had the right tools to respond to those emerging needs and opportunities. And I thought about that from both the perspective of reflecting on what we had experienced through the COVID crisis, but also thinking forward-looking about the strategy we were developing for the next 5 years ahead. So reflecting on the COVID crisis, you know, I felt there was an increased value in blended finance and the complementary types of investment tools that played a role, for example, in a fund capital structure to really serve needs during the crisis, or helped individual companies with flexible debt, for example, to support them with what they were trying to do in response to the crisis. It was really humbling, I think, for all of us professionally and for me personally too, to be recognized by the UN Principles for Responsible Investment last year on our COVID response with the award for Real World Impact Initiative of the Year. The other real milestone I felt last year was COP26, which of course brought a lot of momentum in the UK in particular around the climate agenda. And I felt in our work that came through in two different channels. One, really accelerating our work to drive proven renewable energy technologies at scale and at pace in the markets where we invest. And two, to really bring innovative finance to bear to help in the spaces where there are emerging climate technologies, such as green hydrogen, or in the space of adaptation and resilience, for example, supporting smallholder farmers with new technologies that can help them manage their water needs. So across the kind of suite of needs and opportunities emerging from the portfolio, it was clear that we should continue using our existing core investment instruments, our growth capital, which is really about accelerating proven technologies, accelerating development at scale. That's more than 90% of what we do on a day-to-day basis. And the catalyst strategies that we have used to work at the frontier of our productive, sustainable, and inclusive impact goals. We reached an exciting milestone of crossing $1 billion of commitments in that portfolio as of the end of December 2021. Really exciting milestone. And we're not stopping there. We want to triple the size of this portfolio over the next 5 years and really keep working to shape those nascent markets. On top of that, we have, of course, the BII Plus program, which is where we use grant funding for technical assistance to support portfolio companies and the ecosystems in which they operate, with some market shaping work as well. And excitingly, last year we announced 2 new funding partnerships in the vein of innovative climate finance. One with our key partner FCDO, which was the Climate Innovation Facility, a £40 million pilot which launched in September and was announced at COP. And the second, the Global Energy Alliance for People and Planet, a partnership that has come together around distributed renewable energy. So coming into this year, Lynsay, we have a lot to build on off of all those exciting developments.
Yeah, an awful lot there. And actually, you started to touch a little bit on some of the commitments that we made. Which are the investments that we made in 2021 that you're most excited about in terms of their potential for impact?
Well, I spoke a bit about the climate work we've been doing. And so I thought I might reference a few exciting investments from more of an inclusion angle. So one of them is a company called Better Place. It's an Indian technology company that has developed a worker platform free of charge to workers and focused on the blue collar segment. And the idea is it's just a matching platform for those workers to find formal employment opportunities. And I think this is quite an exciting investment in the context of the post-COVID or COVID internal migrations that took place in India. So, you know, the informal segment, informal employment resulted in a lot of people moving across the country during the pandemic because there was no formality to kind of give them security. And so Better Place is an exciting opportunity to help formalize some of that employment and maybe mitigate that kind of impact in the future. The second opportunity was MedAccess. MedAccess is a key portfolio constituent in our work. They're an amazing partner, and they did 2 things last year that were really exciting. One was supporting COVAX and the distribution of vaccines into the African and Asian markets. And the second was providing a production guarantee for the antigen for the world's first malaria vaccine to be rolled out across global countries, really supporting the immunization of millions of children in sub-Saharan Africa. And the third, which I wanted to bring in to the conversation, is Summit Private Equity Fund in South Africa. This is an exciting opportunity because it's supporting impact businesses, but with a specific lens on transforming the management of those businesses at the executive and non-executive levels with a view on diversity and inclusion, and really holding those companies to account with milestones as they make investments onto how they will transform to be more inclusive in their management and leadership.
Great, thank you, Yasemin. Some really exciting investments there. I was so pleased with the work that MedAccess did on ensuring the continued production of vaccines to make sure that they rolled out on time. And on to you, Srini. Which 2021 investments do you think have the biggest potential for your area?
Sure, thanks, Lynsay. I think if you look at COVID-19 and the impact it has led on our, it has actually left on our economies, it's liquidity, which is the most crucial aspect to keep the corporates afloat on the jobs and also to protect the jobs. I think we really, from our learnings from 2020, in the early part of 2021, when we had a recourse of the pandemic, it's about making sure that we are able to timely support our existing investee companies and also take a little bit more of a sectoral view. For example, we supported 4 to 5 MFIs through a pool bond structure where the liquidity had pretty much dried up to the microfinance institution. Who are especially doing unsecured loans, really. And our support to Kash Foundation in Pakistan, which actually supported a number of women entrepreneurs in Pakistan, which is very crucial. And inclusion is still behind in most of our countries. Opportunities for women to participate in economic activities are very limited. So the impact of these investments will be extremely significant as women entrepreneurs have to contribute, for example, to Pakistan economic growth going forward. In India, we made a $50 million commitment to the social bond issue by a housing finance company called Aavas Financiers to support the gender-focused credit facilities, particularly for housing finance. Again, women will have the opportunity to gain economic security through their own efforts rather than remaining, dependent on others. The other thing which made me very proud was about the fact that we achieved a milestone of our investment commitment of $100 million in Nepal when we started with zero a few years back. And I think this is great to get tribute to the teams in London and in the region to have done that. On the trade side, I think BII facilitated trade and commerce during a very difficult period of risk aversion. In Bangladesh, we committed 60 million to two major banks, Prime Bank and Citibank. And in Pakistan, we gave $50 million to Habib Bank to finance trade, the regional trade. There are two investments that are fascinating that remain slightly close to my heart. Is Medica Bazaar, that provides timely and authentic pharma supplies and medical equipments to the very small tier 3 to tier 6 nursing homes in very remote India, which otherwise will be buying spurious medicines, and it's a highly successful company. And the other one, which also remains close to my heart, is TVS Infrastructure, ILP, which has transformed from merely a warehousing company into an infrastructure solution provider, which is absolutely fascinating to see the way all these companies are trying to transform the country and be a catalyst in their own fields. Yeah. So I'll stop there.
Lovely. Thank you, Srini. And Stephen, over to you.
Yeah, no, thank you, Lynsay. It's very difficult to pick 2 or 3 examples out of the African continent, but in terms of the ones that I think have real potential to have transformative impact, I think the first would be the directed lending transaction we did with First Bank of Nigeria. There we lent them $100 million with the explicit purpose of directing capital to both SMEs and women-led and owned businesses, small-scale businesses across Nigeria that typically really struggle to access capital. And for female entrepreneurs, much like Srini said, it's in a very empowering way of delivering capital to that segment of the population, which is largely excluded. So that getting that right and understanding how to do that very effectively, I think that's a really interesting transaction that hopefully we'll learn a lot from. The second one, which you'll hear a bit more about today, I understand on the agenda, is the Fatisa Food Fund, which is a Pan-African fund that really looks to go into the food value chain across the continent in agriculture. A very difficult sector to invest in, and it's really targeting small-scale farmers, 90,000 small-scale farmers to be precise, and help promote 2,000 new jobs and sustain 10,000 existing jobs in a really tough but critical sector. So I think that's a really powerful platform that we've invested through. And the third one is part of our sort of efforts to harness sort of the digital transformation and help promote that across the continent and really to drive financial inclusion. So we invested in Time Bank in South Africa, which is a digital bank that really targets the lower end income groups that are underbanked or totally unbanked with a digital proposition that will bring them into the formal financial services sector and extend credit and give them bank accounts through a digital platform. So it's scalable, it's at the right price point, and has an ability to really transform people's lives at that lower income segment that is typically unbanked by the larger banking community. So huge potential, and hopefully we'll go into other markets with them. So those would be my examples, Lynsay. So back to you.
Lovely. Thank you, Stephen. And I think ending on innovation like that is actually quite an interesting segue into going back to Yasemin to talk about some of the innovative approaches that we've been taking to develop new tools and really adapt to the needs and the opportunities in our markets. How's that been working out over the last year?
Thanks, Lynsay. I think the the idea began to take shape in the mid of last year, but it's taking on even more validity as we look at the changing macro context around us today. So if we think about the rising cost of capital with interest rates and inflation on the rise across the world, the rising cost of living, whether it's food security or fuel on the back of the war in Ukraine, there is an increased barrier or challenge for investors to be counter-cyclical, like we think the role of a DFI should be. So you can anticipate already that there will be capital leaving the markets where we're investing. And, we saw that happen in COVID. In COVID, it was more of an acute circumstance, or at least we could hope it would be just an acute, short-lived circumstance. This is likely to be a prolonged paradigm. And so I see what we began to hypothesize last year around an increasing role we could play in blended finance in the new strategy as even more central to what we need to do in order to keep momentum around driving capital towards the SDGs. 2030 is just on the horizon. And I think we have a role to play across the spectrum of things. So we spoke about being on the proven end of the scale with respect to climate, and then working at the innovative end of the scale. And I think we can develop a capital toolkit that helps us work at both ends and kind of complete the role that a DFI can play in proven markets with more of a mobilization agenda, working to bring in private capital with the complementary risk appetite that we can bring to bear, and at the kind of pioneering end of the spectrum where we might be demonstrating over time and bringing in private capital over time, but really being a pioneer in funding some of the more innovative interventions and businesses that are really trying to drive inclusion, productivity, and sustainability in this current context.
Great, thank you, Yasemin. So looking forward, we're in the first year of our new strategy. Srini, can I come to you? What does the new strategy mean for us in Asia?
I think we have a new name, an ambitious mandate, and we must deliver. Right? Let me just tell you, BII is not an organization which is trying to get money out of the door. We're not that kind of an organization. We are actually an organization which want to remain very focused under our new framework of what we call as a PSI framework, or development impact framework. We are very much in a problem-solving mode using partnerships, and deals are more a means to solve the problem as opposed to being in a pure deal mode. And that's what makes the distinction between a classic private equity style investor and a development institution like us. So we are here to solve problems on the climate, on gender, and we use technology as a tool effectively for that. And we go out to partners and say, these are the problems we intend to solve. Are you aligned with us or not? If there are partners who are aligned with us, we go with them. And the big thing about BII is our ability to take early stage risks. And for example, in a climate context, we can take the pre-construction risks, which most sovereign wealth funds won't do. And we are longer term. So our ability to have different classes of capital between growth, catalyst, and kinetic, and our ability to take greater risks puts us in a very formidable position in our market. If you look at our overall investments we invest in a country like India, in the context of the country, is probably not that high. But what makes the difference is our ability to create opportunities and mobilize third-party capital. Last point I just want to make here is, I think, in the sense, if we have to make sure that this new and enhanced mandate, we're able to manage this in a more agile and entrepreneurial manner, and think innovatively about ways to deploy our capital, mobilize other investors, and drive transformational impact. So personally, I'm very excited about this.
Lovely. Thank you, Srini. And Stephen, what does it mean for Africa?
Yeah, I mean, much like Srini, I think it's extremely exciting. I mean, I think firstly, for Africa, the new strategy will start by scaling up in Africa. So we'll be scaling up our offices, our on-the-ground presence, building out our capabilities and on the ground in the markets that we invest into, and building that out across the continent. So that will then enable us to choose the right partners on the ground and who to invest in, and work closer with our FCDO colleagues on the ground. So in terms of actually executing on the strategy, that scaling up is really important. In terms of the challenges that we see that we think we're quite well equipped to sort of confront and invest into. You know, if we look at the 3 impact dimensions we're talking about, so from an inclusion point of view, I think inclusion is also about investing into the low-income countries and the fragile states that are numerous in Africa. And how do we go about identifying the right channels in Africa to intermediate our capital into those smaller, fragile countries? So that's definitely something we're very focused on. And you know, we've got a lot of lessons learned from the past, and I think the new strategy will inform us how to do that effectively with the toolkit. But inclusion is also about how do we look at investing and backing Black-owned businesses, Black-owned and Black-led businesses across the continent. Again, part of our inclusion dimension that we're really focused on, backing Black-owned businesses across the continent. In addition to the other diversity, you know, agenda that we have on 2X Challenge with the gender lens investing focus. So that's from the inclusion side. I think our African strategy has that as a very serious central pillar. On the productive side, much like with Asia, I think, you know, the use of technology and pursuing the digital transformation across the continent is something that we think can deliver outsized impact into these economies. Much like what we did with Liquid Telecom or the Global Partnership for Ethiopia in the previous strategy, finding ways to do digital transformation with partners at scale is something that we think will drive productivity across the continent. And we've got some experience of doing that. So that's the second pillar that we'll be pursuing in our next 5-year strategy. And then finally, in terms of the third dimension of sustainable investing, I mean, I think the big challenge in Africa is around resilience and adaptation. And it's finding ways to really help these communities and economies tackle climate change and the consequences of it in the markets we look to invest in. It's a very difficult segment to invest in, but we will pursue this sort of transition, the just transition finance, as well as looking at ways to do resilience and adaptation. You know, leading up to COP27 in Egypt, which is obviously a very important event for the African continent to shine a light on these issues that Africa will confront certainly during the next 5 years during our strategy period. And you know, we intend at BRI to play a very active role in that segment. So yeah, those would be the ways I think we look at the next 5 years across Africa. It's very exciting. We've got a lot of experience, a lot of lessons learned, and the capital to put to work.
Lovely, thank you, Stephen. What really strikes me from what you and Srini have said is actually how we're working for the next 5 years, but a lot of the initiatives that we're thinking of are about building foundations that are much, much longer term than that are about countries having a long-term route to tackling many of these issues. Yasemin, turning to you, what initiatives are you particularly excited about for the next strategy period, and why?
I think what Srini and Stephen have laid out really testifies to the scale of the work we have ahead of us as BII, but also as an industry of impact investors and development finance institutions. And what that means is we won't do it alone. We need partnerships. And I'm in particular very excited about our growing work around partnerships for catalytic capital. So last year, I mentioned we announced the pilot for the Climate Innovation Facility with FCDO. What that has allowed us to do is really dive deep into piloting some new projects with portfolio companies around adaptation and resilience. For example, with Pula, a company in one of our fund portfolios, who is an agricultural insurance provider and wanted to test a pay-at-harvest model. So we've used some of the Climate Innovation Facility funding to back a pilot of a pay-at-harvest model, funding the working capital required to do that. We can also look at partnerships for inclusion. I think Stephen referenced our objectives in terms of Black ownership and leadership, gender lens investing. And of course, we maintain the focus we've had for a very long time on low income and poverty alleviation. And so if we can source a funding partnership around inclusion where we could work with other catalytic capital providers, that would be a really exciting milestone in the new strategy too. And finally, I think we have a significant opportunity to really scale up our work on mobilization in the next 5-year strategy, in this 5-year strategy. And that in particular presents an opportunity to work increasingly with our partners here in the City of London and financial institutions that are working right alongside us here to work for impact in the markets where we invest.
Yeah, all really exciting. Thank you, Yasemin.
I have one thing to say, Lynsay, that very few institutions in the world that will give you the long-term patient capital across capital structures and also different pools of capital to match with risks. That's what makes BII a special place and an exciting place, and will continue to remain so.
Wonderful. Srini, Stephen, Yasemin, thank you all for joining us this morning.
Thanks for having us, Lynsay.
Thank you, Lynsay.
Thank you, Lynsay.